What is going on, guys? What is going on? Good morning, good morning, good morning. Let's just get set up here. It's been a while since we did one of these because I've been out of town for so long and the internet wasn't great where I was at. But yeah, now I'm back and we get to restart these live sessions, which a lot of you guys asked me about. What's up, Levi? What's up, KH? What's up, Nav? Alexander? Darcy. Darcy says good evening. What's up, Darcy? All right. So if you guys saw my video from yesterday, I was basically saying that the most important event for this week is actually the Fed Symposium, which is at Jackson Hole. Oh, by the way, tell me if you guys can hear me. So tell me if the audio is good. Welcome back. We missed you, says Jabba Peter. What's up, Sean, Tito, Law, JP Therapy? What's going on, Reggie? But tell me, guys, tell me if the sound looks good. Good morning. I'm early, so I'll get some coffee. Yeah, but if the sound is good, okay. The most important event this week is obviously the Fed Symposium. Now, this was going to be an in-person symposium at Jackson Hole in Wyoming. However, I think they're going to do it virtually. That doesn't really matter. What matters is what is going to come out of the Fed. Are they going to taper or not? And I explained the inverse relationship between bond yields and bond prices in that video. So go back and watch it. It's literally the last video that I did. And then I also said why the Fed is buying assets in the first place. This is not the first time that they do it. They actually have been doing it heavily since 2008. And what it means to taper. All that means is that they are going to scale back their asset purchases at some point. And I also go over what that means for the market. But I'll go over briefly here. Overwatch says, good morning from Finland. What's up, Overwatch Grandpa? So what that means is basically the Fed is going to stop asset purchases. Currently they're buying $120 billion a month in treasuries, in treasury securities, right? And they do that in order to suppress the bond yields, because if the bond yields go up, as I mentioned in that video, that makes the cost of money go up. That suppresses the value of companies' earnings. That's why you see stock prices go down. So the Fed comes in and tries to save the day by doing these large asset purchases. Now, once that goes away, what happens logically is that bond yields will start going up and they will become more attractive to investors. But when bond yields go up, that means interest rates all across the board, whether you're trying to buy a house or you're trying to borrow money or you're trying to start a business, it makes everything more expensive. And so in order to curb inflation, that's why the Fed starts making these large assets is going to go up. And I talked about how this actually happened was that it did cause an initial shock to the stock market. It wasn't so bad. It was a 6% pullback, which I think a lot of people would welcome now because it gives you the opportunity to buy cheap stocks. But eventually the S&P finished by 30% that year. So traditionally, tapering has just been an initial shock, but it's not the sort of this fear-based event that the market really worries about long term. So it actually provides an opportunity historically to get in stocks cheaper. All right, so hopefully that makes it. Hopefully that makes sense. What date is this happening? Oh, you're talking about the symposium. It's happening August 26th and 27th, which is Thursday and Friday. Buffering a bit. Sorry, let me see. Pfizer FDA full approval. Okay, let's see. Let me just check on the buffering. I think it looks fine now. All right, so let's look at PFE FDA approval. PFE FDA approval. So full FDA approval for Pfizer vaccine it says could come on Monday. I don't think let's see. We just got breaking news here. FDA grants full approval to Pfizer's COVID shot, clearing the path to more vaccine mandates. So there you go. It looks like the FDA approved Pfizer. I'm sure Moderna is going to come right after that because they use the same technology, right? They use mRNA technology, and both Pfizer and Moderna got the emergency use authorization at the same time. So I'm sure that would that Moderna would get FDA approval. Jason says, I thought the symposium got canceled. Yes, the in-person symposium got canceled. However, the announcement is still going to be done virtually. So there you go. All right. Let me look at what does that mean for Pfizer's stock chart, actually. So let's see if we got a kick out of that FDA approval. Wow, the TradingView app is so slow, man. It's just a memory hog. It's crazy. Yeah, so we're up 3% today in Pfizer. You could see it here cracking all-time highs, and it has been overbought. Really, it flashed overbought. This is crazy. This is why you can't rely on overbought, oversold signals entirely, right? So it has been overbought since it was $40, and it is now $50. So I know a lot of folks try to trade off of just overbought, oversold signals. You'll see a lot of videos talking about that, but yeah, that is not the way. You do want to use them as an additional data point, but not as a signal to trade off of solely. Fatima says AMC is pushing. Yes, so we sell cash secured puts on AMC quite often, and it is actually one of the easiest things that you could do. Is SOX L really up 6% just today? Crazy. I was talking about this in my video yesterday, and it gapped up today. It's up 6%. But this SOX L is the semiconductor ETF. It is the 3 times leveraged semiconductor ETF. It is the cheaper version of SOXX. And I was saying that any pullbacks that you see in the semiconductor sector, for me at least, is a buy for the long term, because that sector is looking to double within the next year. Amazon going up too. Yeah, so Amazon is, and that's Mr. Handyhan said that. So Amazon is, as I mentioned, not only in the watch list, not only in my videos, also on the Discord, that sitting at the 300 MA with a 16% discount. You cannot discount, pun intended, Amazon here, right? And you can even do something like a leap. Leaps could be expensive, but you can also do a long dated call spread on Amazon. So if you look at Amazon here and you go to, let's see, you could do a long dated call spread on Amazon. If you go to January, let's go, actually, if we go to January 2022, which is 150 days out, so not that far. With leaps, the further you go, these are pretty expensive if you wanted to buy a leap on Amazon. So usually, refer back to my leap video as to how I pick the strikes for a leap, but usually you go deep in the money on a leap. So you'll do something like the 0.8 delta. Now, if you buy that right now, the 0.8 delta leap is going to cost you is going to cost you, God, brain fart here. It's going to cost you $50,000, right? Is it? Hold on. Let me see. The price, blah, blah, blah. Yeah. So if you bought the leap here, the 0.8 delta leap on Amazon, right, expiring January 21st, this is going to cost you $50,000, which is a shit ton of money, obviously, right? But it's still discounted from buying 100 shares of Amazon here at $3,200 each, right? So, which is going to cost you $320,000. That's what makes Leap so lucrative, is that they are heavily discounted compared to buying 100 shares of the stock. However, not everybody can afford an Amazon Leap. So what you can do, and you don't, if you're buying long dated call spreads, you don't even have to go deep in the money, right? So that invalidates that tenet of buying leaps. You can actually go out of the money. And for those of you that are on the Discord, you know that routinely we buy a ridiculous out of the money call spread like the 39.50 4,000 call spread on Amazon. Now, what that means is essentially that Amazon does have to hit above 4,000 if you're going to hold it until expiration. If you're not going to hold it until expiration, the value of the spread can still go up, and you can sell it for profit early on, right? So if you bought the the 39.54,000 call spread on Amazon, that's only going to cost you $375, right? Now, the max value of this spread is actually $50 because it's the difference in strikes, and it's only costing you $3.63 because it's so far out of the money. However, as Amazon climbs, the value of this spread here climbs too. So the last time we did this, I think we bought it for, I want to say 2 something, and it ended up going to $16. So we 8x'd our money, 7x, 8x our money on that before selling it. So if I buy something like this, yeah, sure. If you really wanted to, because it costs so little, you can hold it until expiration if you expect Amazon to be 4,000 or above by January 2022. And at that point, this spread will be worth $50. So you'll literally be making $46 on the spread per share, which is crazy. But essentially, when you're doing something like this, what you're going to be doing is selling it for a higher amount well before expiration as Amazon climbs. Okay, let me get to some of your questions here because I've been talking for a while. Okay, so I'm going to buy Baidu instead of Baba. Yes, I agree with that because I don't think Baidu is on the bad side of the CPP at the moment. CCP, sorry. That is the Chinese government, essentially, or the ruling party in China. Love my socks, L. You got me in under 20. Yes, I remember that, Evan. You must be a long-time watcher. And I've loved it ever since. Thank you for putting me onto this sector. Yeah, as I said, the semiconductor sector is looking to double in revenue between now and 2030. So that's even less than a decade. That's 9 years. If I was building a long-term portfolio or I was putting money in an IRA or something, the semiconductor industry is one where I would look to heavily, especially on the pullbacks. What's ChargePoint looking like? All right, let's look at ChargePoint's chart. CHPT. I'm going to close some of these windows. Hopefully that helps with the latency here. I don't know why I have like 100 SOX L windows open. And then I want to check on Moderna. Like, I wonder if Moderna is also going up right now just as a sympathy play. Remember, the market is mostly efficient, so we don't necessarily have to wait until FDA approval on Moderna in order for it to go up. It actually could be going up right now just as a sympathy off of Pfizer and an expectation. Yeah, see, Moderna's up even a higher percentage point than Pfizer. I actually like Moderna here, sitting at the 21 EMA, waiting for FDA approval, which, as I said, they use the same exact vaccine technology as Pfizer. So you are expecting them to be FDA approved as well. And Moderna actually has quite a lot of room to go to get to the all-time highs again. So I think there is more upside with Moderna over Pfizer, obviously. And the other thing that you have to keep in mind is the fact that the FDA is also going to likely be approving third booster shots here coming October, November, December for Moderna and Pfizer. I don't know about the other vaccines. All right, so ChargePoint actually looks like, so it did break below the ascending channel here. However, if you look at now, obviously with new information comes new analysis. If you look at this channel here now, this looks more like a parallel channel as opposed to an ascending channel, right? So ChargePoint right now is still, in my view, at support. It still is a good long-term hold. The infrastructure bill, we haven't heard a lot about that, right? So that is an opportunity, in my view, to buy stocks that are related to the infrastructure bill while the chatter around the infrastructure bill has been quieted down in lieu of some of these other things. Obviously, there's a situation in Afghanistan. There is the ongoing business tensions, at least with China. Obviously, there is the Delta variant. There is the Fed actions, right? So the chatter around the infrastructure bill has kind of died down a little bit. But this is an opportunity, in my view, to buy ChargePoint as support. This isn't something that I would bag hold. ChargePoint is not a proven stock. I don't bag hold any non-proven stocks. As a matter of fact, I would set a stop limit on something like this. I did a whole video on stop limits. Just search the Traveling Trader stop limits if you want a tutorial on how to set that. All right, let me get back to some of your plays. What Vanessa says, what up, Z? What's up, Vanessa? Vanessa is a beast trader on the Discord, by the way, so I gotta get her a shout out. Get Grandpa Goku on as a special guest. You guys don't know, but he's actually an AI bot. He's not a human being, so I can't bring him on. He literally lives in the computer systems. All right, I'm just kidding. We never met, but hopefully one day we will have the chance to meet. All right, let's see. Nvidia. Yeah, Nvidia actually, and then someone mentioned Sesson, so we could talk about that in a second as well. So Nvidia, I think, made all-time highs today. Funny enough, my brother sent me a text, and he doesn't trade very often, but when he does trade, he's very deliberate about his trades. And he said, I bought Nvidia calls the other day because I saw that Nancy Pelosi bought Nvidia calls, and lo and behold, he was rewarded, as well as some of you that bought Nvidia calls. Now, if you're a fan of the Discord, you know that I'm extremely bullish on Nvidia, and this pullback here to the 50 MA, or even this pullback here just last week to the 50 MA, was a buying opportunity. And Nvidia was sure to be a $200 stock and above, especially after the stock split here. This is the thing, and this is what I was saying around the time of the stock split, right? When Nvidia was down almost 15% before the split, a lot of people were waiting for the bottom on Nvidia, like, oh, is it going to drop more? Is it going to drop more? But on a high conviction blue chip stock with a bright future, looking to double revenues in the mid to long term, you have to take those 15% discounts, right? So when you see a 15% discount, Amazon right now is discounted 16%, and you see that nice bump up today. But on any of these blue chips that are IRA worthy, right? They're worthy of being held in your long-term portfolio. You have to give yourself a shot. If they're at a 15% discount, you take that, right? As I said before, and those of you that have been watching the videos for a long time, you know this quote, and I can't remember who said it, but I love the quote anyway, that the stock market is the only sale in town where nobody lines up. And it's true. If I told you that PlayStation 5s were at a 15% discount, or Lambos were at a 15% discount, right? You'd relish the opportunity to go line up and pick that up. If I tell you that Nvidia is at a 15% discount, or Amazon is at a 16% discount, you know, at the end of the day, we're apes. It's very hard to train your brain to say, yeah, I really want to buy that, because in your mind, you're like, oh, is it going to drop more if I, you know, put in a little bit of money here? If it drops, then I'll be sad or whatever. And so then you end up FOMOing at the all-time highs, because you see other apes who are enjoying the rewards of their dip buying, right? So I know it's easier said than done. I've been in the market for a very long time. It has taken a long time to tune my brain into thinking that. As I said on the video yesterday, nothing really in the market scares me. I look at fear as an opportunity. So if there is a high conviction stock that you want to add for the long term, and it is a blue chip at that, and it is down 15%, 20%, 30% even, you know, in the manner that we get during major crashes, you want to take advantage of that, because you might never get that opportunity again. And it doesn't matter if it drops more from the point at which you buy it. At that point, you can dollar cost average some more. So hopefully that helps you a little bit with your perspective. Someone had asked about Sesson, so I'll go over this relatively quickly. Sesson is a risky biopharma penny stock, right? And what we were waiting on Sesson was FDA approval. Now, if you look at my updates in the Discord on Sesson, I was saying that if you are a risk-averse trader, right? So after Sesson crossed the $5 mark, I said if you are a risk-averse trader, you want to take profits here. There's no other reason to trade but to take profits. And I think a lot of traders, especially newer ones, forget this, right? They get so used to bag holding for some reason. They think that it's a crime to sell. They don't want to sell too early, right? Or if the stock drops heavily, now they don't want to sell because they don't want to take the loss, right? Even though you can easily sell and use that money for another investment. However, Sesson did actually climb to the $6 mark. And a lot of people in the Discord sold. A lot of people didn't. It is a matter of knowing your risk tolerance, right? If we've been buying Sesson since it was $1, right? if you essentially 6x'd your money and it's coming close to the FDA approval date, and that is a binary event, meaning it could go yes or no, it could go either way, you want to take profits. You don't want to wait for the potential that the answer is no, and then this happens, right? So lo and behold, now if you are trading according to your risk tolerance and your risk tolerance is high, at least on this investment, then fine, yeah, hold by all means. But this right here, this is a great lesson in what can happen in binary events. The FDA basically said no. And on top of that, there were studies that came out that said actually Vicinium, which is the drug that Sesson was looking for FDA approval on, was much less effective than the studies say. There were some rumors about potential fraud within the company trying to pump up the results of this in order to get FDA approval. Either way, that's not the point. The point is that it is a binary event, and if you held on, then essentially you are holding on for the risk that the binary event will go opposite your way. So in the future, whether we're talking about earnings or FDA approval or whatever, if you are heavily up on a position and you are risk averse, take profits. Could the FDA have approved it and Sesson gone to $10? Yes, right? But you have to live with your decision according to your risk tolerance. You can't have your cake and eat it too. Either you take profits and risk that the stock is actually going to go up further than where you sold, or you take profits and you avoid the risk of the stock tanking. It's just the way of the market. You can't have your cake and eat it too. Trade according to your risk tolerance. Would I buy Sesson here? Not really. There's nothing really... Excuse me. There's nothing really currently, and I'm saying would I buy it if I didn't have it? There's nothing really currently that indicates to me that it is a lucrative investment. I do want to see them get a follow-up meeting with the FDA. I do want to see them really respond to some of these heinous allegations that are coming up against the company, against its inner workings, against the results of Vicinium. There hasn't really been anything that has come out that is encouraging, I should say. So there you go. Hopefully that answers your question on Sesson and what trading a risky biopharma penny stock looks like. All right. Always Late says, yes, it is. I'm not sure what he or she is talking about. E-Hang stock. Would you like to hear your opinion on Sesson? I talked about it. Blah, blah, blah. Sesson. Okay. Well, I assume that these are... All right, let's see. Thoughts on Ford. I think Ford is in a lucrative position here. Somebody said Wish. Scott Gavin says Wish, and I assume that you're asking about Wish because I think there is that group. Is it Atlas Trading Group? I think that they are really bullish on Wish apparently. So I get a lot of questions on that. So Ford, I think I put it in my weekly watch list. And by the way, the weekly watch list, I send it out to channel members as well. Obviously, it goes to the Discord members. But the channel members, meaning if you click that join button just below the YouTube video there, I do like to reward people who support the channel with something, right? So I send out my watch list to the channel members as well. But I think Ford was on there as well. And I said that I am looking to actually sell a cash secured put on Ford. So especially if we hit that 200-day moving average, I think selling a cash secured put is a very lucrative opportunity because the chances that Ford would drop further from the 200 MA, especially with their electrical vehicle lineup coming up, I think that the chances of it dropping below the 200 MA are slim. Now, obviously, all car companies are hurting at the moment due to the chip shortage and the supply chain constraints. If you actually tried to buy a new car recently, especially if it's a middle tier to a higher end car, you'll know that there is a lack of inventory right now. It is almost impossible to find a car. It's crazy. Like if you try to find a Corvette, for instance, it's almost impossible. And when you do find one, all of the dealers are marking it up. They'll say, oh, there's a 20,000 markup on this car or a 25,000 markup on this car. So that is really hurting the car industry at the moment. But once some of those supply chain shortages get relieved, then I think you will see car companies and stocks of car companies come back, right? It's just that they can't sell cars. They can't sell any more cars right now because there aren't any cars to sell. You could sell a cash secured put on Ford if the price drops to the 200 MA. So right now, actually, you could sell, if we go out to, let's say what happens if you go out to December, you could sell this is actually not bad. You could sell the 14 cash secure put or the 13 cash secure put for, like, if you sold the 13 cash secure put, you're selling it for $1.35 at the moment. So that would put your cost basis on Ford at $12.65, or sorry, $11.65, which is a lot less than that is here. So if you wanted a chance to buy Ford cheaper, you can essentially sell this $13 cash secured put, right? And what you're actually doing is you are committing to buy 100 shares of Ford, not at $13. Your basis on Ford will actually be $11.65. So you can actually do this today. Now, you can, if you wanted to, hold off and wait to see if Ford does eventually touch that 200 MA, which is at around $12, which would then give you the opportunity to sell this put for a lot more, right? Because the more that the price drops, the more that the stock price drops, the higher the value of puts goes. So you would essentially be able to sell this put for higher. But I do like selling a cash secure put here on Ford if you are looking to own Ford and don't own any yet and want a chance to buy Ford at a much deeper discount than it is currently. So $11.65, essentially what that represents in terms of a discount from where it is currently. We're talking about a major discount here because obviously Ford is a low price stock. So we're talking about a 7% discount on Ford if you sold the cash secure put today. Again, obviously you can wait to see if Ford finds support here or drops down to that 200-day moving average, at which point you could sell the cash secure put for a lot more. So hopefully that makes sense. If you guys have any questions, by the way, on options, cash secure put or otherwise, let me know in the chat here and I'll answer them for you. Over 700 in here, but only 100 plus likes. Oh yeah, guys. Yeah, I don't say this enough in the live chats. I don't know why, because I do say it in the videos. But hit that thumbs up if you get anything out of this video. Bobby Pauly said, I tried to buy a car and it was crazy. Had to pay so much. Yeah, me too. Because the lease on my car ended. So I was like, oh, okay. I'm just gonna pick up the newer version of the car that I have, and I went to the dealership and they were like, yeah, we have one here out of the dealership. I was hoping to run into you while you were in NYC. I had some stock questions. Yeah, man. I was in New York for really a short time. I think it was 2 nights or 3 nights. I don't know. I lose track of time now. But yeah, I was there only for a short amount of time. And I had a meeting there. And then, and then I had to come back to LA. So didn't have a ton of time in New York, but I'm glad to see that the city is slowly coming back, right? In the mornings, the city looked kind of dead, but afternoon, it looked like people were, visiting shops and restaurants and stuff. So it was good to see the city kind of come back. Because during the height of COVID, it literally looked like The Walking Dead. Those of you that are from New York know what I'm talking about. What's good, Z? Good to see you back in the live stream. What's up? How to pick best risk reward on cash secured put? Okay, this is a good question. DL asks. It's not about risk reward. It is literally where you want to buy the stock at, right? So one, you wouldn't sell a cash secured put on a stock that you don't want to own. If you don't want to own Ford, don't sell a cash secure put on Ford. Simple as that. If you want to own Ford, what is the price that you're willing to pay for it? Is $11.65 in the example that I just mentioned, $11.65, is that a good price for you? If it is, then you sell that cash secure put. It's literally as simple as that. It's not about risk reward. It's about what stock do you want to own and what price do you want to pay for it. So that is why I love the cash secure put strategy, because you literally get to name your price. Those of you that are fans of the Discord know that Tesla is like our ATM machine. Every time that Tesla teases that below that $600 range, I sell the $450 cash secure put on Tesla. Fun fact, I haven't been assigned on a Tesla cash secure put ever. okay? And I've been doing this for almost 2 years now, talking about specifically selling cash secure puts on Tesla. So every time it hits below that $600 mark, I sell the 450 put on Tesla. Tesla never hits that 450 range. Could it do it in the future? Obviously, yes, it can. But what I'm saying is I'm happy to pay 450 or less for Tesla. So I sell the 450 cash secure put on Tesla. I never get assigned. I get to keep that money each and every time. And I sell a cash secure put on Tesla every single month. It's literally like my ATM machine. So yeah, the risk reward is literally what you want to pay for the stock. What are you happy paying for the stock? But the mistake that I see is people sell cash secure puts on stocks they don't want to own. 1 second. Sorry. Oh, wow. So this canteen is green and it looks like, it looks invisible at the moment. All right. So hopefully that answers your question. Don't sell a cash secure put on a stock you don't want to own. All right. How much longer is Palantir going to rally for? Palantir is trading in a range. So I'm not sure what you mean by how long is it going to rally for. You could see it clearly here. Let me just remove the other indicators. Oh, and I get a lot of questions about this indicator here. On the right, this is a version of what is called the volume profile visible range. So this right here tells you at which price you are seeing the most volume, right? And we are seeing the most volume around this range here, and it makes sense. So Palantir is at the moment not rallying. Palantir is actually trading in this tight range. Now it is forming an inverse head and shoulders, which is actually a pretty bullish pattern. For those of you that know how to read a chart, can see it without me even drawing it at the moment. Where's my head and shoulders? Okay, there it is. So you could see it actually without me drawing it, but for those of you that need a visual, here's the inverse head and shoulders, right? So this is actually a very bullish pattern on Palantir. Now, you asked how long is it going to rally for? So I said it's not rallying, actually. So since going all the way back to February, which is what, 7 months, 6 months, it's been trading in this tight range, really between 21 and it hit 28 a few times. Now, again, for those of you that are on the Discord, you know that we sold covered calls on Palantir. We're up 40% overnight on those calls. Essentially, what happens when you sell a call is you are banking on the stock to remain below that strike. So if you sold the 28 call on Palantir, Palantir doesn't hit 28, you keep the money 100%. What if Palantir hits 28 and you get assigned? Well, you will then be forced to give up your shares of Palantir, but you're giving them up for profit. So you're selling them for 28, plus you get to keep the money that you sold the call for, which is what makes covered calls so lucrative, especially if a stock is staying within a range or you are expecting some sort of stagnation or even a drop, right? I sell covered calls on all of my long-term holdings at some point. And I did this last week on Palantir after it had this nice spike up to $26. All right, so hopefully that answers your question. But Palantir does look bullish at the moment for the long term. I could see it right up to that $30 range in the mid to long term. I'm not saying it's going to happen tomorrow, but by the end of the year, as long as we don't see major tapering by the Fed, I could see Palantir break out of this inverse head and shoulders and eventually cross to that $30 range. After GME, they jumped on Palantir. So this right here to me is an anomalous price action when it went all the way to 45 or whatever. But yeah, we could see that in the long term. I do think that we could see the $30 range if we see that breakout of this inverse head and shoulders for sure. So yeah, that's it on Palantir. Buying Leap for Pfizer. Our vaccine plays lucrative opportunity. There are lucrative trading opportunities, okay? If you're looking to invest from here, I think that it's a bit late to buy and hold. If you know how to read a chart, like on Moderna, as I said, say you entered Moderna here at $400, right? You put a stop limit somewhere around 360, and you would look to take profit, I would say around 440 first, and then around 488 second, right? That's just based on a quick reading of the chart here. So yes, they are lucrative if you know how to trade. If you don't know how to trade, stay away. I think you missed most of the rally. I mean, Moderna just a couple of months ago was trading below $200. So yeah. All right. What's up, Z? Love the live streams. Oh, the Ape Father. AMC to 1,000. AQST to 100. Appreciate the super chat. Thank you so much for that. The AMC is not in order to drive this thing to 1,000. And call options volumes on AMC have been declining like crazy. So even the idea of a gamma squeeze is far-fetched at the moment. You could see the stock volume here, right? Now, it doesn't mean that I don't trade AMC. I do trade AMC. As I said, I sold cash secured puts when AMC hit the 100-day moving average here. However, is it going to 1,000? No, it is not going to 1,000. But appreciate the super chat. But let's just be realistic about about trades, right? Like I'm all for the anti-hedge fund movement, etc. But I'm also realistic, and I don't want to see people get hurt, right? It doesn't mean that AMC is not going to pump again, right? I do think based on this chart, if we do get volume, AMC can easily cross back into that 50,000, guys. Please. All right. AQST looks like a good FDA run-up play. Yes, but please learn from Sesson, right? You are playing a binary event. There's a chance that it doesn't that it doesn't get approved. So just keep that in mind and don't oversize, right? I think a lot of people make the mistake with these penny stocks of going all in or buying in too heavy. You don't want to do that, guys. Build a long-term portfolio. And for those of you that are part of the Discord, you have an example of what my portfolio looks like. And if you're not, sign up. Link is in the description. But you have an example of what my portfolio looks like. Here's the watch list. Here's the portfolio. I break it down for you, Discord members. You are getting a behind-the-scenes access to this. The Qs, which is the NASDAQ ETF, this makes almost 10% of my portfolio. The SPY, which is the S&P ETF, makes up 9% of my portfolio. You can see the biggest holdings here. Apple, Amazon, Microsoft, Nvidia. These are my biggest holdings. Tesla, I'm a little overweight on because the price of Tesla is now around 700. But I will likely keep this position at around 6%. Facebook is 4%. AMD is 4%. Look at some of the riskier trades that I have here, right? Or riskier holdings. You could see that they are 1% or less. But a lot of people want to hit that home run. And so they go overweight on a penny stock. But what happens when that Fda approval, for instance, doesn't go your way, right? What happens when the penny stock is involved in some sort of fraud? Or what happens if they hit a home run? Look, guys, if you want to gamble, okay, that's fine. But there's a place where gambling is a lot funner than sitting in your boxers behind your computer screen. And that's Vegas. The drinks are free, right? You're in a casino environment. It's a lot funner. If you want to gamble, take that money and go to Vegas. Don't load up on a penny stock in hopes that you're going to make big city dreams come true. But it's your money. I can only say so much. Do what thou wilt. I'm just saying that if you want to gamble, go to Vegas, guys. Anyway. All right. Let's see. Z, what are your thoughts on Shop? I love Shopify. Shopify, I've been holding Shopify for a very long time. However, I do think that newer traders, they are so scared to lose money that when Shopify does see major discounts, like Shopify just a couple months ago was sitting at the 200 MA at $1,000. And it ran up to $1,500, right? So it ran up 50% in just a couple months. But I think people are so scared when they see these drops. However, too much water, too much coffee. But this is why something like the volume profile visible range helps so much. You could see that there's a lot of demand for Shopify when it hits this range here, right? This is what we call a demand zone. So otherwise known as support. Right? But this is where the market sees a lot of demand for Shopify. So when it's at this range And at this point, to me, Shopify is nearing that blue chip territory stock. I don't think I would if I didn't have a position. I don't think I would unless you are a strict dollar cost averager and you know what that means for the long term, right? If you're the type that's going to buy here and if it drops, you're going to start crying, then no, probably you shouldn't be in the market anyway. You should look to tune that out of your brain. But if you're a dollar cost averager, meaning say you get paid every 2 weeks and you're like, hey, Shopify is one of my high conviction stocks, and you put a little bit in every 2 weeks, yeah, fine, sure. Especially with the concept of partial shares, right? On some platforms like Schwab, Robinhood, SoFi, I think you could trade partial shares. So you don't have to spend $1,400 a share on Shopify. You can buy a dollar amount. So you could put in $200 on Shopify and you'll own partial shares, right? Or fractional shares, what they call them. But yeah, if you're an avid dollar cost averager, fine. Otherwise, I don't know that I would buy Shopify here. I would wait for it to see if it does drop more because currently it is below the 50-day moving average. You are seeing that death cross potentially between the 21 EMA and the 50 MA. All right, let's see if UST. However, again, don't go overweight. That's all I'm saying. But do what you want. If you want to go overweight, fine. That's on you. Just don't say that I didn't warn you. Hi Z, when you sell covered calls, how far out of an expiration do you like to choose? It depends on what my conviction is on that stock and what the chart says. So with calls, with any option, the further you go out in time, the more money you'll either pay if you're buying an option or the more money you'll get if you're selling an option, right? So there is that trade-off between the more risk you are taking of the price actually hitting that strike of your call and that your share is being called. But again, you are essentially selling a covered call at a price higher than you bought the stock for. So is the risk really a risk if you are making profit? Not really, in my view, right? I think what the mistake that newbies make is that they sell a call for higher than they bought the stock ends up running up, and then they start wanting to backtrack like, oh no, I don't want to give up my shares. And so they end up closing their call for a loss. I see this a lot. I didn't think that that problem was that endemic until I started running the Discord, and I saw people did this a lot. They would sell the call, the stock price runs up. They are going to make profit if they get their shares called, but they realize that they want their shares and they don't want their shares to get called, right? So yeah. Damn, you're a good guy. I don't know what that's in reference to, but thank you. What are your thoughts on Shop? Yeah, I went through that. I missed a question by Tamir. I wanted to answer it because I think AMC can go to the 60s, and then if it tests the high, can pump to 100. Yeah, maybe. But it does need volume though, right? It needs a lot of volume. And if most of the shares are being held right now, right? And I don't know what the latest statistics are. The last time we heard from the CEO, he was saying that over 80% of the shares are owned by retail traders, right? So if you're assuming that most of the shares are being held on right now, where is that extra volume going to come from, right? Unless hedge funds start creating synthetic shares, which I don't think they'll be doing because they got burned one too many times, right? And even if they do create synthetic shares, meaning shares out of thin air, i.e. naked shorting, they would have to create so much in order for that volume to spike on AMC. So you get what I'm saying? It's a numbers game. It's not, when people say, oh, AMC is going to 1,000, they're not thinking of what are the conditions, what is the equation that is required in order to get AMC to 1,000. What needs to happen is there needs to be more volume. How do you drive volume? Well, there has to be shares to trade in order to drive volume. If most of the shares that are available to trade are being held by retail investors, where is that volume going to come from, right? Like if they bought the shares and they're hoarding them under their mattress, who's buying and selling then? That is why when you look at AMC, you don't see any volume because it seemingly looks like everyone that owns shares is holding them, right? You can see this volume. Look at this here. What I'm talking about is here, right? you could see the volume tank because there aren't, again, seemingly if the retail trader is holding most of the shares, where are those shares going to come from? Now you have to rely on hedge funds to create synthetic shares, but are they going to create hundreds of millions of synthetic shares? I don't think so. So you need to have volume in order to drive the price up, right? Like what drove this price up here back in June is traders started buying AMC once again. But after this buying here, what they did was they started holding onto their shares, right? So you need to have more shares in order to drive the volume up. It has to come from somewhere. It's an equation. So when you say AMC to 1,000, it doesn't make sense at all. Because there's the numbers aren't there, right? So I just want you guys to be realistic about it. Really, from a market standpoint, it's all about supply and demand, right? And if there's no supply there, then it's not going to drive the price up. So this is what stop losses are for. You talking about a pharma stock? I don't know. Oversized weight will kill us. Yes, of course. Juan Liel, he says, we prefer the NYC casino. Which NYC casino? Dude, there's no casinos in New York. Vegas is funner. I guess the NYC casino, I think the closest is what? Atlantic City? Yeah. I wish they approved gambling in New York. But, dude, New York, I think, was the first state to outlaw online poker. For those of you that are online poker players, you'll remember, what was it, 2011 or 2012, Black Friday, when they banned online poker? It all started in New York, so you can blame them. All right. Thumbs up. Is Baba a buy? I don't like really anything that's on, like, okay, if you have a corporation that's in a country where the state can literally mandate whatever it wants, regardless of how powerful that corporation is, and that corporation is on the bad side of that government, then in my view, you stay away from that stock, right? I know that Baba looks like a buy because of the price. And who knows? Maybe Jack Ma comes back from the prison cell that he's in Mongolia or wherever the hell they have him, and maybe he kisses the feet of Xi Jinping, and maybe Baba gets back to 300. Who knows if you are going to trade Chinese stocks? NIO, for instance, I talked about before, it's sitting at the 300-day moving average. You could sell a cash secure put on NIO. But NIO is partly owned by the CCP. It's on the good side of the CCP. It is seen as a Tesla competitor and a competitor or a company that can at least take on that high-end EV market at some point, at some time, at least in China, right? They don't really need to expand to other markets, even though they are expanding to Europe. But the Chinese market is large enough. That's why you see companies that operate strictly within China and still make money, is because, you know, there's 1.5 billion people there. So there's a huge market right there at their doorstep that they really don't need to expand. So I do think NIO is the CCP's darling. I don't think Baba is. Clearly. If you are going to invest in a Chinese internet company, I guess you could look at Baidu. You can look at JD, right? But it's fair warning on Chinese stocks at the moment, for sure. Now, we have seen overreactions in the past play out, and the stocks do get back to their back to good graces, but I would not invest in Baba. I'll be honest. I think there are better opportunities. Why not invest in Amazon? You know what I mean? Yeah, that's just my take. Obviously, can I trade options outside the States? Hey, most of the Discord members live outside of the States. Well, I don't know about most, but I would say based on just a high-level take, I would say at least half live outside of the States. And you can trade options. Use interactive brokers. That's what most people use. And in some countries, you can actually use Tastyworks, which I love. But yeah, look up interactive brokers, look up Tastyworks. You could trade options outside of the States. Is AQST a squeeze play too? It's a potential squeeze play, right? The humbled Megan asks. It's a potential squeeze play. It doesn't mean that it will, but it is a potential squeeze play. You know what? I actually want to look at what the options data if I can't even remember if AQST has options. Let me see. If it has options, yes. If it has options, then certainly you could see a potential gamma squeeze. I've talked about what a gamma squeeze was before, but essentially it's when you have AQST if the stock itself is shorted, right? So let's see. Let us look at Ortex. If AQST does have a lot of short interest, damn it. Really? All right, let's see. AQST. All right. So right off the bat, you could see here. Oh, wow. Yeah. The short interest percentage is not that high. If you look at it, it's hovering around 6%. But I think what people are banking on is this, days to cover. Now, days to cover just means theoretically, how many days would it take for short positions to cover based on a average daily volume of 3 months. Okay. So I know that calculation is sounds a bit complex, but basically it would take the higher this is, the worse the short situation is, the more likely you will see a short squeeze, right? A lot of people focus on just short interest, i.e. what percentage of the shares are short, but you need to focus on days to cover because this tells you that how many days would it take to cover those shorts, okay? So 4.39 currently, that is pretty high. Anything over 1 is considered something that should be on your radar. Certainly when you get into the 3-4 days range, that is considered high. So is it a short interest candidate? Yes, I guess just based on a high number of days to cover does not mean a squeeze will come. As a matter of fact, most shorted stocks do not see a squeeze, okay? Again, this goes back to the home run mentality. People want to hit home runs and they want to find these opportunities where they can make a lot of money. I don't blame them. Everyone wants to make money. But just know the realistic data, right? Know what the actual data says. Most shorted stocks do not see a short squeeze, okay? What needs to happen is you need to see volume coming in with these short interest factors at play in order to see a short squeeze. So hopefully that makes sense. All right. Z, based on what you said for Baba, wondering what you think of KWeb. Holding 200 shares. Nobody knows what 200 shares means to you. Is 200 shares 50% of your portfolio, or is 200 shares 0.5% of your portfolio? That's irrelevant. 200 shares means nothing. It depends on what that means relative to your portfolio, right? So I don't know, again, what 200 shares means. But if you're overweight on KWeb, yes, that is a problem in my view. You don't want to be overweight on it. Could you hold a certain amount of your portfolio in it? Yes. As a matter of fact, I do retirement portfolio. I have in emerging markets as well as the Chinese market, and I do have FXI there, but it's less than 1%. It might be 0.8% or something like that. So keep that in mind. Position sizing is the most important thing, not the tickers that you choose. The best one on YouTube. Appreciate you, Tamir. Always appreciate you tuning in. Have fun at work. All right. Can you check out Clove shorts on Ortex? Huh? Because on what is this? On Clove. Yeah. And it looks like it is climbing, right? It's in 17.5 right now. Days to cover is only about 1 day to cover. So again, just because something is shorted doesn't mean you have high conviction on NEO. If so, then I don't know what the sad face is for, right? If you have high conviction on it, buy it at a discounted price and hold it. No need to have a sad face. If you want quick profits, learn how to trade options, right? Otherwise, in this case, we're talking about investments, and whether it hits 60 this year or 60 next year, what does it matter? right? That's what options are for, right? Options allow you to make shorter term conviction plays on stocks, as opposed to buying and then, putting a sad face emoji because it didn't hit your price target within a month. I mean, this is the stock market, guys. This doesn't make sense. What stock to buy today? Amazon. I already told you a million times. Amazon. If you want something riskier, look at Moderna before the FDA approval. You don't have to be a Discord member to get this. If you support the channel in any way, I give this to you as a way to say thank you. But there's a list of tickers here that are at major support levels. Boeing is at the 300 MA. MasterCard is at the 200 MA. Micron, which is a great semiconductor play, don't overlook it, is at the 300 MA, right? AMD is at the 21 EMA. Oh, I have Micron here listed twice for some reason. My bad. I have a swing trade on AMAT. Vale is back at a support level here, right? Robinhood, I'm looking at for a potential rebuy after a fine support. Spotify is at major June 2020 support, right? Ford, we talked about already, and NEO, we talked about already. So hopefully that gives you some ideas. If you want access to this weekly watch list, then either sign up to the Discord or support the channel as a channel member, which is that little join button under the YouTube video. But yeah, there you go. There's some ideas for you. As I always say, I don't believe in being fully divested from the markets, right? There are always opportunities. It doesn't mean that you buy Nvidia at all-time highs. You would look past that, right? And you would look to areas where there are other opportunities, like some of those stocks that I mentioned. So if you look at MasterCard currently sitting at the 200 MA, look at Micron, right? This to me is one of the, remember what I said about the semiconductor industry and about plays like AMD and Nvidia. If you are getting a major discount on a blue chip stock, especially one that reports insane earnings, right? And beats earnings and is already a profitable company, especially in the semiconductor space, you want to buy it. To me, Micron here is one of the best long-term buys, sitting at the 300 MA at the bottom of this descending channel, right? And you could see where it sees most of its volume. Again, this volume profile is a very helpful tool here. It sees most of its volume above this price. I might actually even buy leaps on Micron. So if we take a look at the options on MU, let's see what we can buy. So remember, as I said in my leaps video, oh wow, there's a ton of open interest here on Micron for the January 2022 contracts. Look at this. At the different strike prices, it looks like there's a lot of leaps already bought on this. So the $40 leap has 4,000 open interest. The $50 one has almost 7,000, 3,000, almost 6,000, 4,000, 3,000, 6,000. The $70 call option has almost 13,400 contracts open. The 85, which is way out of the money, has 15,300 open contracts, right? So a lot of bullish activity coming here on Micron. I do like this for the long term. So I would go out to something like January 2022. And remember, when you're doing leaps, you want to go deep in the money because you want to basically have that leap option act similar to the stock price, right? But you are getting in at a cheaper price. So if I bought this $60 leap here for $1,325, essentially that allows me to control 100 shares for $1,325. If I was to buy 100 shares of Micron today, that would cost me $7,000. So you're getting a fraction, right? You're paying a fraction of the price to control this leap, and that option will move up by 80 cents. So you are getting 80% of the stocks. You're capturing 80% of the stock's move while putting in a sixth or a seventh of the capital required to buy 100 shares of stock, which is amazing. So in my view, if you are bullish on Micron like I am, then I would buy a leap on Micron, and I will do this actually after the live call here, or the live. Why can't I speak right now? See, this is when I know I got to sign off and get my ass to the Discord channel so that I could do the trade alerts. But the live stream, right? I will actually buy a leap on Micron here. Actually, you know what? Here, let me put it in the Discord channel. So, but I'll buy the $60 leap, and the price already went up. I think people are buying it based off of this video, by the way. But here we go. So this is what the alerts look like. And for those of you that aren't part of the alerts, sign up if you want. We just closed the target spread that we opened for 50% profit. We just did that this morning. So buying the MU $60 call expiring January. When does this expire? 2022. Actually, it is a call, but it's more like a leap. For 13, how much can I get for it? Let's see. So if I buy this leap right here, right, I can get it for, and I always pick like the low end, right? So the mid price is 13.25, and I see if that fills, right? So if that fills, great. If not, then I have to adjust my price. Boom. There you go. That's an alert sent out, right? So that's exactly how the alerts work. And I just did one for you in real time. All right. All right. This is actually easier to do on my phone. 1 second. I just have to adjust my order real quick. Orders, working or plays. Let's bump it up a little bit. Let's bump it up to 1330. Nope. Let's see, people on this live stream are buying it because the price is going up. All right, so I was filled at $13.35. There you go. All right. Cool. Bullish about Micron in the long term. Now, what happens if Micron falls? Well, yes, you will obviously lose money on that leap, but what you could do is actually roll it out to a further expiration. So come September, if we do see Micron actually dropping below that support level that I pointed out, right? Like if Micron drops below this 300 level and starts tanking, then I can either close my position out for a small loss and look to re-enter, or I can roll my leap forward and buy some more time, right? But this is what, these are the types of plays I like to take advantage of. Now, if you don't want to buy the option because it's either expensive or it's too risky for you, then yes, as I mentioned in my watch list, it's at the 300 MA and I own shares of Micron already. Okay. So keep that in mind. All right. So let's GM a falling knife due to chip shortage. Yeah, it looks like it. Catherine says, welcome to, Catherine. What's up, Catherine? Welcome. GM, Intel is not on your list. Intel, yes, I am bullish on Intel. Z, are you a millionaire? It doesn't matter. Okay, guys, it doesn't matter. What matters is instituting proper trading strategy. It does not matter what I am. Yes, this is definitely a falling knife. What the hell? Let's see if it finds support at the 300 MA. But yes, I mean, again, these car companies are taking a hit because of the chip shortage. GM looks like it's oversold for the first time since March 2020, right? So, but wait for it to find support. I would not buy options here until it finds support. And if you're not invested in the stock, I would certainly wait until it finds support as well. Are you buying these Chinese stocks? Rewind the video. I talked about it already. Options are insurance for stocks. Sometimes you pay for insurance and don't use it. It could be. Yes, it could be. However, there isn't any insurance in which you get paid in the same way that you would like a cash secured put or a covered call, right? In that case, you are actually getting paid for that insurance, which makes it wild. Like I still, to this day, I've been trading options for decades, and to this day, or for over a decade, and to this day, it boggles my mind right? That you can sell cash secured puts, right? Thoughts on Wish? Yeah, I mean, Wish is a risky, unproven stock that we took profits on when it ran up. When did I make a Wish video? I think it was in June, but that day it popped up to the $15 range. Great profit taking opportunity. Sitting here at 661. As I said, I think people are asking about Wish because there's a big trading group that was touting Wish as a good investment, and I do think that Wish, at a certain price. The thing is, we just don't know what that price is because it hasn't been on the market for a long time. But there is an opportunity here. It looks like it is finding support here. Again, I would not go overweight here. Their earnings were less than stellar, which I think is what caused the price to gap down, right? But at $6.61, it's essentially a penny stock. So, take that for what you will. You want to invest in it, fine. There are fundamentals there in terms of it being a potential hyper growth company, but again, it's unproven. So take it for what you will. I wouldn't go overweight on something like that. Ahmet Kaya, can you tell us which chart you use for weighted DCA? And other advice is also welcome. Which chart you use for weighted DCA? What do you mean? Which chart I use for the daily chart? Is that what you mean? Like the time frame? The daily chart. Hopefully that answers your question. Guys, please, with the thoughts questions, ask a more poignant question. Thoughts is a very lazy and basic question. Hello from NYC, says Yash. What's going on, Yash? All right. Wix, SoFi. I just don't see Wish currently as a good long investment. They keep losing market share to competitors. Yeah, maybe. Weighted daily cost average, I think. What do you mean? The chat is getting messy. I think it's time that we all sign off and go trade. Is Soxel a buy right now? I talked about it already. Yes, it went up today. There was an opportunity to buy it. If you didn't get in, the market's not always going to provide you with opportunities. At this point, you're better off just DCAing. Do you have a video on covered calls? Do I have a video on covered calls? That's a good question. I think I do. Search the Traveling Trader covered calls. Daryl says, what's good, Z? What's up, Daryl? All right. I think I'm going to sign off. It's nearing 8 o'clock Pacific time, so I've been on for an hour and 15 minutes. And I do want to go and continue trading and, talk to the folks in the Discord. Can't help it, but sign in and answer people's questions. It's me that has separation anxiety. All right. Why did Jazz drop after FDA approval? Because it was priced in, right? But I do think that based on fundamentals, there is actually a long-term opportunity on Jazz. It is a pharmaceutical company that relies on more than just one drug, right? So like something like Sesson was relying on its one drug getting FDA approval, and it's not a pharmaceutical company like Jazz or like, J&J, etc. All right, guys, that is it. I'm going to call it a day here, at least for the live chat. I will be doing more of these. As you know, I'm back in my home element, so I will be doing more of these on the Discord. Stay safe out there.